Welcome everyone to another episode of How to Make Money in Stocks with Investors Business Daily. This week, we're going to do a bit of an IPO themed show.
Yes, we are. And you know what? This kind of ties into a webinar that we had on Wednesday with executive editor of IBD, Chris Gessel, and portfolio manager for O'Neill Data Systems, Mike Webster. And it was a fantastic webinar. I'm excited to talk about IPOs today. This is an Amy topic that I love.
It's the fun stuff. So we're going to take a look at a couple of historical IPO stocks and see how that ties into what's going on today. But first, let's take a look at the market.
It was a wild roller coaster week for the markets. We had 2 brutal days of selling, and then we had a couple of days of bouncing back. In a market like this, cash really is king, but a pullback in general is a very good thing. This allows the leaders to take a breather and to form new bases.
And that's a good point to bring up, too, because that is what happens during an extended correction. The leaders are going to form a base, and then they're going to break out, hopefully, in the new uptrend that comes after that. But it takes time. And we came very close to getting a follow-through day this week, but that really would not have given the leading stocks enough time to set up proper bases and get ready to break out again. So that's something to keep in mind as we get closer to a possible follow-through day. Part of that equation is you also want to see the leading stocks have time to refresh and set up new patterns.
Well, several stocks also suffered what looked like really a flash crash. And this was no doubt generated by computer selling. You saw this in Facebook, Netflix, Starbucks, Google, and several others had these really harsh sell-offs.
Right.
They did bounce off of those lows, which was good to see. But what it meant is what Matt said. We're really not seeing these chart patterns look right. Basically, it broke everything. It broke these areas of consolidation. It will take some time until we see these areas consolidate again and for stocks to set up in some proper bases. The good news is, though, there will be first-stage bases.
That's true.
Because they will have undercut the previous base. So that is a good thing.
That is a positive thing. Now, if you take a look at Alaska Air, this is a weekly chart, you can see that kind of wild action that we saw this week. And you can see how it fell below the 10-week and it fell below the 40-week. But on the positive side, it came back and reclaimed both of those lines. But on the more cautious side, it's not out of the woods just yet. Neither are the many other stocks that look very similar to Alaska Air. Clearly, there is still uncertainty and volatility in the market. And again, even if we do get a follow-through day, you want to proceed with caution.
Okay. All in all this week, there was the feel that there was a shootout at the OK Corral. Only you just didn't know which way the bullets would fly. Now, the dollar was higher and oil was higher as well. They had some really hefty gains in oil. That was on the Venezuela scares. The GDP numbers showed a stronger economy and weekly jobless claims fell. So again, the question is, will the Fed raise interest rates? And the answer is not easy. A rise in those interest rates would only push the dollar higher. The dollar has been higher the last week. That would hurt our economy and our multinational companies who export products overseas.
And when you think about it, this is a very news-driven, volatile market. And because of that, it helps a lot to have some rules and, of course, the patience and discipline to actually follow them. So if we did even have a follow-through day that would launch a potential new uptrend, you still have to proceed with caution. And we say potential because some follow-through days do not lead to a nice sustained uptrend. So you have to proceed with caution. And another thing, back to what we said earlier, another warning sign right now, or maybe a reason to be more cautious, is the leaders are not setting up near proper buy points just yet.
That flash crash and the heavy days of selling that we had really broke what we had, but were even possibilities of consolidations or bases. So also breakouts are almost non-existent, and stocks hitting new highs are, there's a rarity of those as well. Stocks hitting new lows are plentiful. So those are some things that you want to be a little bit concerned about. Yeah. As IBD Executive Editor Chris Gessel and O'Neill Data Systems Portfolio Manager Mike Webster pointed out in the IPO webinar this week, it could take a while for the market to settle down and to find a real trend. We can just see the damage that was done in the NASDAQ and in the S&P.
So you have to be very careful about potential head fakes in this kind of market where a stock or the indexes will jump higher for a day or two. Everybody gets excited, hey, we're back in it, but then it comes back down, especially on heavy volume. again, we keep emphasizing this idea of a follow-through day, and you can learn more about that on our website. But until you get that follow-through day, and until you see some leaders breaking out on heavy volume from a proper base, there's really not a compelling reason to jump in. And even then, when you see that, get in gradually, because if the market and the leaders really take off, you'll have plenty of time to add to your position with less risk. Now that we're in a market correction, it's the perfect time to look for stocks that could potentially end up leading in the next uptrend. And that's especially true if we end up going into a sharp, extended downturn, because when an uptrend eventually does come back, there's going to be a new crop of leaders that emerge to lead that new run. And often they are the newer IPO stocks that have gone public in the last couple of years.
And IPOs have always been one of my favorites. I noticed a long time ago that these newer companies can offer some huge gains for investors. Now, of course, not all of them go on to work. A great many IPOs will fail, but the ones that work in spades.
That's right. And because not all of them do work, one of the key rules for IPO trading is don't buy on that very first day. It's just too risky. Instead, wait for a base to form. So we're talking about this because this is the perfect time to make sure that you know how to handle IPO stocks so that you are ready when a new uptrend begins. So we'll get into that today. And we'll also give you a sneak peek at our new home study program, IPO Trading Strategies.
Now, we had a very special webinar Wednesday of this week. We had executive editor Chris Gessel and portfolio manager Mike Webster from O'Neill Data Systems. And they did a really neat IPO webinar. There's lots of learning in it. You definitely should watch it. And they also talked about the IPO home study program that we have. And this is a great time, as Matt said, to take a look at these IPOs so that you can capture some of these in the future. And we will have a link to that on our homepage at investors.com/investingshow.
And one of the nice things about this home study is that it shows you many different IPO bases that did work and a whole bunch that didn't. And I just found that really helpful to see the contrast, because once you've got through, I think there's 125 charts in this book that comes with that. But once you've gone through those, you have a really good sense of what one that works looks like and what the ones that fail typically look like.
Now, in the webinar, they talk about why do we trade IPOs? Okay, first of all, what do we look for in an IPO base? What are the ones that's successful? What do they look like? When are you going to buy them? And when are you going to sell them? And they also talk about the current stock market, which is very interesting. And they even mention a couple of current IPOs. So it really is exciting, and I hope you guys go check it out.
And let's look at a specific IPO so that we can go through and show some of the important traits that you want to look for in a newer IPO stock. And a good one to study is Google.
It's a perfect one.
Perfect one. And that made its market debut in 2004.
Now, a couple of key points that Chris and Mike mentioned in the webinar were things, as I said, to look for in an IPO base. Now, those first couple of days, you have to have huge spikes in volume. And you want to make sure that it's really institutional in quality. Several million shares are usually traded. And that shows you that the pros have an appetite to go and buy it. And as we take a look at Google, this is a classic example. We can see in those first couple of days, there was massive volume.
If the stock then pulls back and starts to form an IPO base, look for trading to be relatively tight. Because if you see a lot of big, wide and loose, volatile swings, that's a warning sign. But looking at this, you can see that Google showed a fairly controlled trading activity at that time as it built that base. And volume on the downside particularly lightened up.
Now with Google, as it started to move up the right side of the base, and it moved up 10 days in a row, the volume was institutional in quality. And it wasn't as heavy as the first couple of days. It usually, that's when a lot of huge volume comes into a newer IPO. But if you see 5 or 6 million shares traded day after day, that's definitely a sign that the institutions are in there buying shares.
Now the buy point was 113.58, which is 10 cents above the peak on the left. And Google cleared that in September after a couple of false starts. Now, with these brand new IPOs, you're not going to have the horizontal moving average.
The 50-day moving average
Right,
line.
for the average volume that shows you if it's trading above or below average. But just eyeballing this, you can see that volume was heavier than it had been in the bottom of the base.
Now, the ideal length of a newer IPO base is 2 to 4 weeks, although some of these can be as short as 9 days. And the more successful IPO bases were formed in the first 25 days of trading. This is a weekly chart of Google back in 2004, and you can see the nice, tight, and fairly short IPO base, which was 4 weeks in length. And then it broke out on that 5th week, and you can see that RS line, which compares a stock's price performance to that of the S&P, was screaming into new high ground. And we often see this in the big market winners.
And it's easy to see why that relative strength line was rising. Google gained 73% in just 8 weeks. Now, that's obviously a huge gain, and not all IPO bases are going to launch that type of move. But big moves do happen from these bases, and as Chris Gessel and Mike Webster showed in the webinar, these IPO bases have a long track record of generating solid profits.
The webinar showed a really interesting graph. Now, Mike has done a lot of research on the type of bases that go on to make what we in-house call a model stock move. And that means that these are stocks that can go on to make these massive moves in the market. And we want to capture these kind of stocks. So you can see by the graph, the IPO bases showed the greatest potential compared to the cup with handle, compared to the double bottom. And a great example of a stock that made this massive gain is Home Depot, which ran up 1,753% from its IPO base.
And another example of a stock that more recently formed an IPO base and has the potential to become a big winner down the road is the smart car technology firm Mobileye. And I did an IBD stock analysis video on that on Thursday, which you can see on our website. But this points to another key question that we have, and that is, well, where can you find these IPO stocks so that you have them on your watch list?
Yes. Where do you find these IPOs? Well, every week in IBD on Tuesday and Thursday, we have a section called the IPO Leaders. And this gets updated so that any new IPOs that might be forming a base pattern or that are showing strength in the current market are going to appear on this list.
And here's what that looks like. For each of these IPO leader stocks, you're going to find the mini chart, the same one that you find in the IBD 50, sector leaders, and other screens that we have. And you'll also find the IPO analysis article that highlights related trends, and it also alerts you to particular stocks of interest. You'll find the article in the paper and on investors.com.
Now let's take a look at the ticker symbol here is AVOL. This is Avalon Holdings Limited. It came public in October of last year, and it's held up nicely in a volatile market. Now, taking a look at this, we can see that the year-to-date gains for Avalon is about 46%. Now, there's a short description also of what the company does. They are an Ireland-based provider of aircraft leasing. And finally, we can see at the bottom, there's a little description underneath the mini chart telling you about the chart action.
And the reason we're talking about this, as we mentioned earlier, is that now is the perfect time to hone your IPO trading skills and start your hunt for those that have the potential to make big gains when a new, sustained, solid uptrend begins.
I like the idea the way you said on the hunt. I like that. We're on the hunt for these great
Always
stocks.
on the hunt.
Yes.
It's a constant process. So if you're not doing it already, be sure to start checking the IPO leaders list and the IPO analysis article every Tuesday and Thursday.
Now, in the home study program, there are 3 hours of video with 125 IPO charts, and you have portfolio manager Mike Webster as the instructor throughout. And we've seen him a lot at the workshops. We've seen him in chart school. We've seen him at level 4. He's a terrific instructor. He's been at the firm for a very long time.
He's an incredible researcher, too.
Yes, he is.
Because he's done a lot of the research that's created IBD Stock Checkup, the composite rating, and a lot of other tools that you already use.
And he's made a great deal of money in the market. So you're learning from one of the best of the best. So if you want to trade IPOs with more conviction and success, and if you want to learn some alternative buy points of how to get in IPOs, this is a great program.
How would you like an edge that helps you pick winning stocks faster? An edge that is proven to outperform the S&P 500 by 76% since inception, and that you can take advantage of today without spending a dime. More on that in a minute. Each day, our top market team at Investors Business Daily scans our proprietary stock lists and screens to find superior stocks with the most potential for big gains. They analyze these stocks every step of the way to show you basis, buy points, sell signals, and the right time to take profits. It's about as close to hold your hand investing as you can get. Introducing Leaderboard by Investors Business Daily. For a limited time, you can try all of the premium features Leaderboard has to offer for a full 14 days at absolutely no cost to you. You'll receive unlimited access to all of the time-saving research, powerful investing tools, the leaders list, cut list, and expert analysis you need to develop a winning investing strategy. And it's all 100% free for your first 14 days.
Since the theme of the show is IPOs, we wanted to show you a stock that came public, had a nice run, and then corrected sharply in a bear market, but then went on to have another spectacular run once we had a new uptrend in the bull market that started in March of 2009, and that stock is Chipotle Mexican Grill.
That's right, and it is a great example of why you should keep an eye on these top-performing IPOs, even if they sink, as most stocks do, during a bear market or an extended correction.
Now, Chipotle went public in 2006. It formed an IPO base, but after a quick jump, it fell into a longer correction. Now, it formed a 38-week cup with handle base, and it began to move higher and reached a peak on January the 4th, 2008. But then the stock cratered along with the rest of the stock market, this is just a very good lesson to keep in mind. Most stocks are going to follow the overall market trend. Now, check this out, Matt. It slumped 76%, which is a really big drop. But fortunately for Chipotle, it was able to turn around.
Now, of course, think about what time that was going on. This happened during the bear market that was caused by the financial crisis, where Apple, Google, and other big growth stocks made similar declines. So that's why you need to protect yourself and protect those remaining profits when that kind of downtrend emerges. But as Amy said, Chipotle was able to bounce back, and it made a stellar rebound when a new bull market began in 2009.
Now, this is why it's important to keep looking at stocks that may be potentially setting up even as the market is declining. And Chipotle went on and formed a series of bases after we came out of that bear market. It finally ended its major run in April 2012. And that was the famous 15 weeks, the inch-by-inch type of a thing that Bill O'Neill talked about on our show when he appeared here. But then Chipotle did decline and correct before earnings had it set up again, and it ran again.
So keep that rebound in mind as you review today's newer IPO stocks that have strong fundamentals, good institutional sponsorship, and they're leading a major trend. Maybe it's the Internet of Things, cybersecurity, cloud computing. Keep an eye on those, even if they are currently correcting and the charts don't look so great, because when you have a stronger uptrend and the overall market is good, they may become the big winners in the future.
Be sure to come and see me. I will be in Phoenix for a Leaderboard Summit. This is the third week in September, so I'd love to see you. Come out and join us.
And to reserve your seat, and also to check out the IPO webinar that we mentioned earlier, as well as to check out the new home study program, IPO Trading Strategies, go to the links at investors.com/investing show.
Okay, see you next week, everybody.